Welcome, everyone, to the Wealth Management Review from Daniel Krug and Associates for September 10th, 2020. Today's presentation is titled, What Goes Up? My name is Rocky Istvan. I'm the Chief Compliance Officer and Associate Wealth Manager at Daniel Krug and Associates. I'm just going to remind you that this presentation is for informational and illustrative purposes only. It is not a solicitation and should not be considered investment or tax advice. If you have any questions or need any help, please call the office and we will take care of that for you. Today's presentation is about 25 to 30 minutes. We will leave time for question and answer at the end. This session will be recorded so you can review it later. We want to thank City National Rockdale for their contribution. A reminder that everyone will be muted, but you can use the chat room for typing in questions on the right side of your screen. So let's move on to the presentation. I'm going to come on and just say hi to everybody. Good to see you guys. Glad to have you on board with us today. Just a reminder of what wealth management means to us at Daniel Krug and Associates. Investment consulting, developing your investment strategy is obviously very, very important in the foundation of what we do at Daniel Krug and Associates. But what separates us from the rest of the advisors out there is we get heavily into the advanced planning area. And as you know, as clients of ours, the advanced planning makes all the difference in the world. And what are we talking about in advanced planning? It's things like wealth enhancement. You can see those strategies underneath it in the box. Wealth transfer strategies, wealth protection strategies, and for many of our clients, charitable giving is very important. So we have many strategies and programs to help along those lines too. Let's get into our agenda for this week. This week, we're going to cover the major developments that have taken place. I'm going to talk a little bit about a lot of the investment considerations, things that we have to think about when monitoring and adjusting the portfolios and making them do what they need to do. Highlight some of those activities and considerations. We're going to talk about COVID, an update on that, an update on the economy and the markets. And then at the end, we have time to answer any questions. So again, if you have a question, go ahead and type it in on the right side of your screen there, and I will try to get to those at the end. So I'm going to sign off here and jump into some of the major developments for this week. First, 2 studies came out. COVID forecasting services did some fatality estimates, but what's interesting is they differ substantially. And we're going to present that a little bit down the road here in today's presentation on the vast difference between those 2 studies. And some of it has to do with the flu seasonality and what they think the complications with COVID are going to be in the flu season. Another thing that took place is colleges that opened, some of them had seen a spike in COVID positive testing. So obviously they're not demonstrating being an institution of higher learning because they're not practicing the social distancing and things that need to take place in order to keep the spread down. Vaccines, we expect to have some results later this year. I've got a slide on the leading vaccine producers and where they're at. The true vaccine safety, though, will not be known until millions have actually taken the vaccine and we can see those results. And the concern is that there could be an issue with the distribution of the vaccine when it becomes available because it will be limited. And how do you fairly distribute that is going to be an issue we have to deal with. Another development is stocks were soaring, some of them. And by no surprise, we saw it the first week of September here, correction starting to take place. And we don't think that that's necessarily over at this time. So we're going to go into that a little bit. The economy continues to move along gradually. However, the second stimulus package didn't get through Congress, and that's impacting the recovery. It's going to slow down people's ability to spend that are not working and continue to buy the things they need. So that needs to be addressed. Temporary furloughs because this is dragging on longer than originally expected, the whole COVID situation and opening the economy, a lot of those temporary positions are now turning into permanent job losses. We know the small companies, small businesses are really hurting as a result of this, and those jobs may not come back. An average of election polls right as of now slightly favor Biden. However, things had tightened up in the last couple of weeks, and the Senate races are very, very close, most of them too close to call. So it's going to be an interesting election season. Business reopening remains largely undefined. It's very difficult, even within states, how to reopen businesses, what businesses. I know here in Michigan, we've seen some easing up a little bit. Some of the gyms have been able to open and things like that with 25% capacity, things like that. So we're moving forward, but other states have had to pull back a little bit. And European countries have actually kind of started resisting some of Chinese tactics for trade and things like that. And so we're seeing a lot of problems there. Obviously, the United States also is discussing trade, and we've got trade issues with China. So this is going to be an ongoing concern that we have to watch. And that's why I thought it'd be good to talk a little bit about how the investment committee looks at things and things they have to consider on a weekly basis as we monitor and adjust those portfolios to get those returns out of this market, out of this volatile market. Here's some of them: raised expectations for Q3 and 4. So actually what happened is the GDP forecasts have gone up a little bit because we have been able to get some of the economy going and stuff like that. So back from the end of the first quarter into the second quarter to where we are now going into the third quarter, we see a little bit better potential growth in the economy. Earnings for companies are generally better than what was forecasted 6 months ago. Still, though, we have 13.6 million unemployed workers, and we're going to talk a little bit more about that. This is an interesting statistic with everything that's going on. Consumer net worth is at a new record high, $123 trillion for the United States consumer aggregate net worth. New high in the middle of coming out of this pandemic and things like that. So very interesting that that is taking place. And I think that's actually helping boost some of the consumer spending that's going on. Existing home sales rose by 24.7% to 5.86 million. So now resales are now higher than they were back in February. So that's something that has actually jumped ahead of our previous high. However, manufacturing output, while it's still below the February levels, is showing signs of improvement and continuing to move forward. We talked about this. Fiscal stimulus remains stalled, but it's still very necessary for the large number of people that are unemployed, that they have some means to pay their bills and keep things going as we get the economy going again. 49 states legally require a balanced budget. It's in their state documents. So what are they going to do? Are they going to raise taxes? Are they going to cut spending? We're going to have to really watch this and see how that impacts the overall ability for consumers to spend, how much of their money is going to the government versus going into their personal needs. Municipal governments entered the pandemic, though, however, in a relatively strong financial position. We know that we've had many years of growth, and because of that, the coffers of our local and state governments have been able to get filled back up. Don't know how long that can last, but we definitely were in a better position relatively going into this pandemic. So hopefully we don't have to do too much from the tax side on the local level or state level. Know your credits. This is one reason that we believe really strongly in companies like City National and our other money managers that manage bond portfolios. There's downgrades coming to the bond market. companies just are going to get downgraded with the lower expectations and earnings and things like that. But our bond managers have done a great job on looking at the portfolio and relying and researching and developing a portfolio of high quality bonds that will be sustainable through this to maintain our fixed income positions in the portfolios. So it's not really our concern, but you will be hearing about downgrades in the bond and credit markets. Valuations for stocks and bonds are actually very high, not just high. So one of the things that we're constantly doing is exploring alternatives for getting those returns where we need them to be at.